Hello and welcome to this virtual kickoff session on financial services to see what Alaris can bring to your businesses and to your partners through the use of automation. So when we have a look at the financial services market, we can see this market has become more aggressive than ever. Not only are operational costs increasing through manual processes, the requirement for data security and keeping up with technological advancements, we can also see that the revenue opportunities are decreasing. There are more opportunities out there that are being taken by the competition. There's the rise of on-demand services. So this is where small companies or even online portals are taking those profitable chunks out of the whole end-to-end stream. A lot of people are virtualizing, so you're now getting virtualized conveyancing, which is a big competitor, and people are becoming more happy with not having the traditional shop storefront or the big name brand above the door and using these online services. There is also the issue of customer attrition. If a service is perceived to be poor or a customer doesn't actually understand the time process of that service, they very, very quickly leave, spread word of mouth, and spread on social media that they've not had a good experience. So we're looking at ways to actually avoid some of these issues facing the industry. Now, one of the key metrics that is always measured is the cost-income ratio. The cost-income ratio is how much it costs for you to process each individual customer's requirements. And that is a cost that is direct to the business. So one of the ways to improve it, increase the customer numbers, the number of customers you have. Therefore, you're dividing a bigger number by the same cost. That improves the ratio. Or you can reduce the number of offerings and therefore the headcounts, and that will have the same function, but is obviously detrimental to the business overall. An example of this might be if it takes you a team of 4 people who can process 100 applications each per day, your hard limit is roughly 400 applications per day. If you take some people out of the business, that number obviously goes down. But if you could improve operational efficiencies so that each of those 4 people could do 150 per day, then obviously you're going to have a much higher number of application forms and therefore charges that you can actually process through. Traditionally, the way people would look is if they were looking to actually drive up during the spring and autumn months when business tends to be busier, they would have to bring more staff on. Now that allows them to cope with more throughput, but it adds increased costs to the business. So it's not ideal. So we're going to look at the ways of allowing those people to do more by driving efficiencies. And one of the ways we're going to look at that is through mortgaging forms, which are taken either through the traditional banks or through local solicitors and conveyancing agents. So let's have a look at who we should actually talk to. So within this market, the financial services, we obviously have the big brands. We also have the companies that operate as a pure conveyancing service that we can target on there, and mortgage loans within there in the actual organisation. And if we narrow that down as to who we should be talking to, we can see we can either talk to the business owner, if it's an individual or small company, or if it's a larger firm that specialises in that kind of work, we can talk to the administration team leader, because they will be keeping eyes on the metrics of how many applications they have, how many scans they've got to do. They will know the peaks and troughs within that business, and they need that information to allow them to make lending decisions. So if you have, worst case, a 50% failure rate, if you take in 100 loans, applications, and you have a 50% failure rate, then only 50% of them are viable. If you need to make the number up to hit revenue targets, you quickly need to find ways to cope with 200, 300, 400 applications coming through the organisation. Revenue generated from there is the lifeblood of the business. Now, mortgage applications themselves are large documents with lots of key data within them, and they require accurate collection, secure processing, and analysing prior to an offer being made to the customer. So when we get these documents in and making sure it's checked is a key time stage that is usually done by dedicated teams. And when we look at what these teams do, documentation comes in a variety. It all has to be split out into its component parts. So these might be the application themselves, it might be credit checks, it might be utility bills, it might be bank statements, and these all need putting into the pack to ensure that the decisions can be made in a timely manner and that everything is correct. So some of the items on here that make it slow is checking a document to see that all the pages are there, checking the document to make sure that signatures are on there. These are all items that slow down the efficiency of that actual process. Once they're done and the pack's sent forward, they scan them, and those documents are then sent out to the individual decision makers, whether they're making the decision on the risk, whether it's on the size of the loan, the affordability, but all that information needs to be available securely and quickly. So when we have a look at the current process within the customer, what would typically happen is the document pack would be received, it was broken down into its component parts, and we saw here that this was taking roughly 30 minutes. Then each one of those sections was manually checked to check the data was complete. They would then scan them, pass it over to the next phase, they would make a decision, respond to the customer, and then it would loop through those internal processes. Challenge that was creating, main one was time. Manual data is slow and laborious to process. The total cost of the process was high from a manpower point of view, and the response times were far too slow. And this whole process cost, response and customer attrition rate was affecting the customer income ratio on there. They were losing too many customers due to slow responses, and they were paying too much for the slow process due to the overall nature of the process. People are expecting things instantly these days, not it's in process or we're waiting for this or it's nearly there. They want it instantly. So what did we actually do about this? Well, we found a suitable solution to the problem by investing in the Kodak Alaris scanner, the software which was Capture Pro, and some of our professional services to automate that to speed it through. So now when the packs came in, they're able to scan them at high speed, and much of the classification and data extraction and validation processes are made automatically. We had a specific setup with the OCR which could identify certain documents, and it would put that document data into the bookmark within the PDF. So a decision maker could quickly go to the section of the PDF. Let's say it was bank statements. That brought up the bank statement. They could look at it, validate it. Yep, that's okay. I've done my part. I'll approve this step in the process and move that along. So how has that changed? Well, the process now is they start to see a backlog of records coming in. They scan the documents. Notice we've taken that step out of all the deconstructing the document. They would open each file and they would name it with the customer, so Mr. Smith, what the job number was as a reference, and the actual customer code put to them on there for ease of identification. Then they file it, save it. The decision maker goes in and locates the customer folder. They read those and save as the serial number and the batch number, check everything is correct in verification, audit lot's completed, and it all moves forward into the next stage. So just to recap the challenges of the whole process, it was slow, negatively impacting the overall cost of profitability of the business. It wasn't able to upscale for demands in the spring and summer, and it wasn't able to make best use of the staff. And they were too busy checking documentations and checking for signatures, which can be done in an automated process. The benefits that we've passed through to them of this solution, the total time of processing has come right down. The whole pack is now available within moments of it actually being scanned. Once the OCR and the scripts in the background have run their processes, that is available and can be sent over to the key decision makers. The response time therefore has been cut down, and they actually took the step of, once the pack had been produced, if the scan system came back with a 0 errors passed to decision makers, it would actually fire an email off to the customer to say, hey, we've received all your information, it's all correct, we're currently processing it. Because an informed customer is a happy customer. If you can get to them and let them know what stage you're at, what the next stage is before they have to inquire, that's peace of mind for them. And they say to you, hey, that company was great, they really kept me in the loop. The process was a lot faster, and that meant that the cost involved in making the process was much lower, so therefore the cost income ratio was actually improved. So then we look at what made us unique in this. The hardware, software and services all from a single supplier who knows how to actually configure those systems, has done it before. The image quality from the scanner drives high OCR rates, so that minimises the number of exceptions where a human would actually have to get involved and look to see is that signature present or not. And it was actually a very powerful and effective solution at a very reasonable cost for what it actually brought through to them. And it's actually meant that they can process, it was about 40% more documents within the same given time period using the same existing staff. What does that mean in real terms? It means they don't have to bring on temporary staff, train them, and put them into the process and then monitor their work while they get the hang of it during those peak times. So overall, it was a win-win scenario for the customer and for their customers. Thank you.